of the Bangko Sentral ng Pilipinas. Our speakers for today are Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor Nestor A. Asunida Jr. and Deputy Governor Diwa C. Gunigundo of our monetary and economic sector. Governor.
Okay. Good afternoon. At its meeting on monetary policy today, the Monetary Board decided to raise the interest rate on the BSP's overnight reverse to purchase facility by 25 basis points to 3.5%, effective Thursday, 21 June 2018. The interest rates on the overnight lending and deposit facilities were likewise raised accordingly. In deciding to raise the BSP's policy interest rate anew, the monetary for 2018, and that the risk of possible second round effects from ongoing price pressures argued for follow through monetary policy action. Although inflation expectations remain within the target range for 2019, elevated expectations for 2018 highlight the risk posed by sustained price pressures on future wage and price outcomes. Equally important, while latest baseline forecasts have shifted lower for 2018 to 2019, upside risks continue to dominate the inflation outlook, even as various measures of core inflation continue to rise. Moreover, the impact of international oil and commodity price movements on overall inflation is expected to be stronger given prevailing robust aggregate demand conditions. Given these considerations, the Monetary Board believes that further policy action enables the BSP to reinforce its signal on safeguarding macroeconomic stability in an environment of rising commodity prices and ongoing normalization of monetary policy in advanced economies. The Monetary Board likewise reiterates its support for carefully coordinated efforts with other government agencies in implementing non monetary measures to mitigate the impact of supply side factors on inflation. The Monetary Board also emphasized the BSP's continued vigilance against developments, including excessive peso volatility that could affect the outlook for inflation. The BSP is prepared to take further policy action as needed to achieve its price and financial stability objectives. That's the end of my statement. Thank you very much.
Thank you, Governor. We will now distribute copies of the statement. So we will now give the floor to DG Diwa on the inflation forecast for the request of the
Well, given
reporters.
the lower than expected May 2018 inflation, the BSP reduced its forecast for 2018 from 4.6 to 4.5%, and for 2019 from 3.4 to 3.3%. Yeah. Now, in the discussion of the monetary policy stance by the Monetary Board, uh, is expected to remain elevated. One is the sustained robustness in economic activity for the second quarter up to the end of 2018. Second, the board also noted the positive base effects from June to August of 2018 because of the difference in the oil price assumption as well as in actual numbers on oil prices. In June 2017, for example, oil prices averaged only $46.47 per barrel. Third is the minimum wage expected to uh, be implemented by October of 2018. And on top of that, based on the actual approvals by the wage boards of 5 to 30 pesos on average. And finally, the excise tax of tobacco, which is expected to be implemented based on schedule in July of 2018. That's about 2 pesos and 50 centavos per pack. Now, three reasons were also noted by the Monetary Board why in 2019 inflation is expected to decelerate. One is the expected decline in oil prices. That's for 2019, the basis of futures prices, as well as assessment of the different forecasts of the IMF, for example, the USEIA, and other international institutions. Second, the world non-oil import price growth is also expected to decelerate. And finally, negative base effects from January to August of 2019 due to supply shocks on oil, food, and excise tax in January to August of 2018. Those are the reasons taken up by the Monetary Board that led to the decline in the outlook for 2018 from 4.6 to 4.5, and for 2019, 3.4 to 3.3%.
So thank you, sir, for that information on the inflation forecast. We now open the floor to questions or points of clarification from our media friends. Please be reminded to state your name and organization before asking your question. Claire?
Right. Good afternoon, Gov. Carissa from Bloomberg. You said you're prepared to take further policy action, and after the May 10 decision, which was 25, and then another 25 now, and you're still forecasting a 4.5% average inflation for 2018. Would you say that you much more is needed, or how much more is needed in the coming meetings to bring to anchor inflation back to target in 2019? And second, have we more or less given up on 2018? I mean, you have accepted that 2018 is going to be a miss in terms of the target, and now you're just going to uh, 2019 to goal. Thank you.
2018 basically reflects what we have earlier described to be supply side factors that cause inflation to spike. And there have been developments since then. And as we are forecasting right now, our best expectations is that the inflation will come back to target by 2019. Nonetheless, this is a forecast, and forecasts are have uncertainty around it. And considering that externally there are also uncertainties, so we're looking at a couple of things. BSP has always been data dependent in terms of its policy actions. That's also why we come back to review the situation and refresh our assessment every 6 weeks. So today we are announcing a further 25 basis points policy rate hike. That's basically informed by the latest data that have come to our information since the last meeting. So you asked, in my statement, I mentioned about the potential for further policy action. That is a statement that basically reflects our continued watchfulness. We will continue to monitor the data flow and see whether what we have done so far, two policy rate hikes, is sufficient to secure our return to to target range by next year. So what you will probably ask, what is the BSP looking for? So obviously we're looking at the trends, and so far the trend seems to be um, positive, although as observed, the 2018 forecast is still above our target. There's no denying that based on the best available information that we have. And we're still looking out whether inflationary trends will further broaden and whether there will be second round effects. So this remains to be seen. Right now, the action taken, in our view, is sufficient for the information that we see at this point of time.
Are there any more questions?
Good afternoon, Gov. Mika Flores of Nikkei. And during your last meeting, you mentioned that the 25 basis point increase at that time was sufficient to anchor inflation. So, what were the things that you saw during the over the policy horizon that warranted another rate hike in your meeting today? Thank you.
Okay, so on the more positive side, we see momentum seemingly slowing down. But at the same time, we're looking, as I mentioned, whether or not stability is not declining, but some additional commodities are there. So that's one factor to look at. And then we are monitoring petitions for wage hike and also fair adjustment, so which might be indicative of second round effects. Expectations are also rising. We're also seeing more volatility in the exchange rate, which potentially adds to the dynamics on inflation that we need to be careful about. So these are but some of the factors that we are looking at. It's still a very, as I mentioned in an earlier statement, it's still a fairly complex environment, and there are uncertainties. And what the BSP is signaling to the market is that first and foremost, we truly put a lot of focus on hitting our inflation target. This year seems like it's not no longer possible, but definitely we'd like to hit the target next year, and that's what we are prepared to do in terms of policy action.
Um, let's see, ma'am. Yeah.
Hi, sir. Melissa from Business World. Sir, in your view, has inflation already peaked? Or if not, when do you see that figure peaking this year? Thank you.
Yeah. Based on the monthly path of inflation, we expect the peak to happen in the third quarter of 2018. I think this is much earlier compared to the previous projection that we presented to you during the May 2018 meeting of the Monetary Board. And I think this is also due to the fact that the momentum of inflation appears to be slowing down. If you take a look at the month on month, there's a very definitive trend towards slowing down of inflation. January month on month was 0.9, February zero point 0.7, March and April zero point 0.5, and May 0. If we decisionalize that, you will have a zero point 0.7 January, zero point 0.7 February, zero point 0.7 March, April is zero point 0.3, and then zero point 0.2 for May. So it's slowing down. And that's the reason why we think that the peak could be earlier. Um, but a lot would depend, particularly on oil prices. Oil prices is a very important and very critical assumption in the projection of the BSP. I think we should also bear in mind that there are also possible mitigants of inflation down the road. If again, if Congress is able to pass the rice tariffication bill, in development, based on the BSP's estimate, a quarterly decline in inflation could be achieved if the rice tariffication bill is passed by Congress. So it's about zero point 0.2 percentage point. Um, Also, if we see the Pantawid Pasada, which has been actually budgeted by Congress, being implemented earlier on, that could also help mitigate prices. But as the governor emphasized, the move of the BSP is really meant to strengthen the anchoring of inflation expectations, which could have been affected by what people are seeing today.
Okay, so is the mic with you, Dax? Okay.
Sir, Dax Lucas of the Inquirer. Sir, in previous episodes of high inflation over the last, say, 2 decades, the central bank had always emphasized that high inflation is a greater threat to the stability of the economic, social, and political arenas than, say, low growth. Does the central bank still believe this today?
These are not disconnected events. I think the way to look at it, Dax, is the, the, the mandate and the tools available to the BSP is primarily and is, is primarily managing prices or keep inflation low and stable. In fact, our charter says um, price stability conducive to economic growth. So that's roughly what it says. And realistically, our the assigned responsibility to us is to keep inflation low, and we have the tools to discharge that mandate. Now, the concern from your question is that if inflation gets out of hand, then that will warrant strong responses that can come back to, in the end, whatever growth is happening could be aborted by the need to deal with inflation. Because at the end of the day, even if there's growth and if inflation is spiraling out of control, then if you measure the ultimate objective in terms of people's well-being, then that doesn't really quite answer. It's not responsive to what's good for our society. So we need to constantly strike the balance. But the BSP best operates doing what it knows, which is basically to focus on the inflation side. There are other agencies of government and the private sector who are engines of growth. So we have our complementarity of roles here.
I guess what I really mean to ask is, do you believe that the growth oriented inflation poses?
The growth that the government is pursuing is very much in line with what its commitment is. And the BSP's role is to balance that up to make sure that the growth is a sustainable one. That's the whole point of the effort. We want to see sustainable economic growth. And we are not working at cross purposes in that objective.
Any more questions? Did I see Warren's hand? Okay. Sorry. We'll have to bring the mic over to the other side, please. Oh, okay. There's another mic. Okay.
Sir Karen Reuters. Sir, just wanted to clarify something when you said that you're seeing more volatility in exchange rate, which adds to inflation dynamics. What do you mean exactly? Because I think the BSP has been saying that the pass-through impact of the peso has been becoming less in terms of inflation. Are you talking about this in relation to also the its impact on the widening trade gap, current account deficit?
What the dynamics that I was referring to is the context now is we are actually in a way seeing a change in the global environment, and the dominant element here is the pace and magnitude of normalization now clearly beginning in the United States, more recently being echoed in Europe, given the ECB statement to start unwinding QQE. So these developments suggest that the world is moving away from what it has seen in the last couple of years of fairly easy liquidity, of fairly lower interest rates, and fairly lower inflation. So the world is in a way is coming back to what it was prior to QQE, and we need to factor that in. It has implications in the sense of for emerging markets like the Philippines of capital flows. So the consequence of that ultra low inflation environment was there was spillover of flows into the emerging markets. We're still continuing to see a positive inflows, and we're seeing